Hey, welcome back to FiscalVoyage. My name is Felix. In today's video, we're going to determine if Tesla stock meets the rule number one investing from Phil Town. So I created a spreadsheet of the rule number one investing criteria, which is considered return on investment capital, the revenue growth, the sales growth, the earnings per share growth, the equity growth, as well as the free cash flow growth. And these 5 criteria, I created a spreadsheet which you could download in the description below, and it follows the rule number one from Phil Town, rule number one investing. And we're gonna see if Tesla stock meets those rule number one investing criteria in this video. So before we get started, if you're new to the channel, make sure to hit that subscribe button. And if you'd like to make money, hit that like button as well. So let's get started. So here's the spreadsheet that I created for the rule number one investing from Phil Town. This spreadsheet could be downloaded in the description below. There's a link for it to download it. 5 key elements that Phil Town likes to analyze or research before he buys a company is the return on investment capital, the revenue growth, the earnings growth, the equity growth, and as well as free cash flow growth. So we're going to look at Tesla stock and see if it meets those criteria. And those criteria is those 5 metrics that I mentioned, and 10% and higher growth for 10 years, 5 year, and 1 year. So we're going to see if Tesla meets that requirement. So first thing first, what we do is go to Morningstar, type in the Tesla stock symbol TSLA, and then go over here to key ratios, and then full key ratios data. And that's going to bring up a separate tab. And then in here is all we do is simply highlight the past 10 years revenue. We're going to highlight it like that, and then bring it over to the spreadsheet. Again, you could download the spreadsheet in the description. There's a link to it. And you can see here this growth rate automatically fills up. The 10-year revenue growth is 81% annually compounded, which is outstanding. And 57% for the 5 year and 14% for the 1 year. So revenue is slowing down, but still very nice numbers. So next thing we want is the earnings per share. You can see here the company has a negative earnings. So you see here it still calculates the growth rate there. Next is the equity or book value per share, which is this one here. We just highlight the 10 year and bring it over there, and you can see here their book value and equity growth has been tremendous. 10 years 35.3%, 5 years 35%, and 1 year 27%. So that's outstanding. And next we look at free cash flow. Free cash flow is what the business is left over after all expenses and operating costs as well. And you can see here, they've been negative in free cash flow. And the most important metrics that Phil Town likes to look at is return on investment capital. That's all the way in the bottom in Morningstar. So we want to scroll down and get these 10 years return on investment capital. And you can see there, 10 years negative 22 average. This already comes in percentage. So what I did here was averages for the 10-year average, 5-year average, and 1-year average. And you can see here the 1-year average has been getting better, but I also put this part down here, which is what Phil Town likes to look at first, is the return on equity, return on investment capital, equity or book share value per share, earnings per share, sales, and then cash flow in that criteria. The most important one, of course, is ROIC, and then equity, and then earnings, and then sales. And he's a little lenient with the cash, depending on what the business is doing with the cash. But you can see here, Tesla does not meet the requirement. Phil Town rule number one investing requires that the return on investment capital is 10% and higher for the 10 year, the 5 year, and the 1 year. He also requires an equity which is 10% higher for the 10 year, 5 year, 1 year. Equity beats that very nicely. You can see here equity at 35%, 35%, and 27%. And then the earnings per share, he likes to see that at 10% and higher for the 10 year, 5 year, 1 year. The same thing for sales and cash. And then, but we see here that based on Phil Town rule number one investing, Tesla does not meet that requirement. Therefore, we should skip Tesla. the fact that ROIC is in the red or not above the 10% criteria, we already should just skip it and move on to the next company. So this is why, you know, I wanted to create this video and just say that Tesla does not meet the Phil Town rule number 1 investing criteria. So again, you can download this spreadsheet there's a description below, a link to it in the description, and you can download the spreadsheet and do the same thing what I did, which is go to Morningstar, type in the ticker symbol, and download the information, the 10 years for the revenue, return on investment capital, book share value, earnings value, and free cash flow. And you could download, copy and paste the 10 years and just paste it right in, and then this will tell you if it meets the Phil Town rule number 1 investing criteria. So obviously Tesla does not meet that. So there you have it. I hope you guys enjoyed this video. So basically Tesla stock does not meet the criteria for Phil Town rule number 1 of investing. That's okay. You know, all the stocks doesn't have to meet it, but based on his criteria for rule number 1 investing, Tesla stock does not meet it. But again, you could check out the spreadsheet that I created. It's easy to use. In the description below to download, there's a link. It also includes my free ebook. And again, thank you for watching. And if you're new to the channel, hit that subscribe button and like this video if you enjoyed it. And I'll see you in the next one.